Hey, founders, welcome to the No Nerds, No Problem podcast. This week, we are talking all things fundraising with Brett Calhoun, director at Scale, a venture studio and accelerator fund in Columbia, Missouri. We're going to talk all things early stage fundraising, but we're going to dive deep on what it takes to raise capital as a non-technical founder, especially if you find yourself outside of the big markets like Silicon Valley and New York City. Enjoy the show. Hey everybody, welcome to the show. Today we are very lucky to have Brett Calhoun, Director of Operations at Scale VC in Missouri. Brett, welcome to the show.
James, thanks for having me. Really excited to be here and definitely talk about a topic that is very near and dear to my heart.
Today we're going to be talking a little bit about early stage financing. Scale is an early stage VC. They've got a couple different funds and programs. We're going to talk about those in a bit. I have this terrible habit on this show of just jumping into questions and not giving people a chance to talk about what they do. So let's not do that this time. Brett, if you could just give me a quick rundown. What do you do? What do you do at Scale? What's your background?
Yeah, so my background really started in accounting, finance. I'm a CPA. I was doing valuation work for sell-side M&A, litigation, really anything in transactions. So anytime there's M&A or somebody's trying to sell their business or whatnot. Got into startups when I was getting my MBA, had the opportunity to work with a pre-seed fund, and that was investing in Missouri founders. Absolutely fell in love with the whole culture around startups and working with people who are just extremely passionate about solving problems and delighting customers, yet had an issue where they didn't have access to capital. So really grew my passion there. Got the opportunity to work with one of our portfolio companies called Patient, which is a fintech healthcare company. And from there, wanted to get back in after getting some operating experience, wanted to get back in investing, worked with the legal tech fund for a little bit and was able to get my hands dirty there being on the founding team of a company called CapGains, another fintech where we were solving pain points around government tax incentives, starting with qualified small business stock, which is something any founder listening to the show should be worried about because you could potentially save 100% on your capital gains after selling your startup. Found another company called Charlie Mike, where we were really bringing financing solutions tailored towards our veterans, and started that with financing closing costs on VA mortgages. So really helping veterans get into homes and start building generational wealth. And now I'm at Scale doing what I absolutely love, which is working with founders across North America, helping people in underserved markets get access to capital, talent, and network effects. So we're an accelerator fund and venture studio based in Columbia, Missouri, investing in, across North America with a focus on the Midwest and underserved markets. Venture studio side, we're starting businesses and sourcing technical talent to come in and be the co-founder for that company. And then accelerator side, it's a little bit different than the typical accelerator where it's more mentor education driven. We do offer mentorship through the program, but it's more of we're a silent co-founder for 12 weeks, actually digging in, getting the trenches and helping our companies. We've even had occasions where we're up at 2 a.m. on a Saturday, role-playing a negotiation with one of our companies where they had a term sheet with a fund. In context on just Scale in general, why we're in Columbia, Missouri, we were started by the brothers of a company called Equipment Share, which is founded in Columbia, Missouri in 2015, actually came out of Startup Weekend in Columbia, Missouri. And since then have grown this company to over $1 billion in revenue to thousands of employees. In addition to that, there's the startup ecosystem in Columbia, which is not well known, is been very good in the sense that there's Zapier here, which is a $5 billion plus company, Equipment Share, the company called Patient, in addition to many more. But the founders of Equipment Share really wanted to start Scale to really solve some of those problems they had as founders building under capital constraints, and have roped in all these founders who have been successful around the Midwest to build Scale and help those other founders.
So I want to come back to the location piece because I think that's a really important thing, especially for early stage founders. There's this obsession with Silicon Valley sometimes and this weird pull towards it that may not be necessary. I want to come back to that. But I want to first start off talking about you guys. You mentioned you guys run an accelerator fund. You run the studio as well. For someone who doesn't know really anything about early stage financing, this might be their first startup. Maybe they're even just still at the idea phase and they're trying to figure out how they're going to fund it. What does the early stage landscape look like these days in terms of options, angels, accelerators, studios? And then more specifically, how does scale kind of fit into this ecosystem?
Yeah, so from the super early stages, obviously, 10 years ago, when you look at the early stage markets, there's, I don't even know, 30% of private capital that there is today. I think there's over total $2 trillion in the capital markets, even more in the public markets. Um, but from the super early stages, we see a lot. There's definitely grant funding across Missouri that is available. So there's like Digital Sandbox in Kansas City, and different things in St. Louis with through like T-Rex. Um, Columbia, Missouri has things through like the University of Missouri program, and there's little help, like accelerators on campus of these universities in the Midwest popping up. In addition to that, if you're trying to raise some early stage funding, it is a good option to go through an accelerator fund, especially if you're a first time founder, where there is a bit of a learning curve with wearing all the hats with the company. And so, being in a co-working space or incubator or accelerator fund is beneficial to a lot of those first time founders, and in some cases, second time founders, as a capital source. And what comes with the accelerators is normally, if you're at a decent one that has a network, is really those network effects. So in Missouri, or in the Midwest in general, there's not a ton of capital drawn towards the pre-seed stage, which is one thing that we want to solve, is that gap in like the pre-seed funding or even the pre-seed funding. And so I would say angels are a good option, but it really just depends, because if you're going to go to angels in the super early stages, you have to be cognizant of some of the terms you're signing. Is that going to be a convertible note, and you're going to be paying interest, and then that's debt on the balance sheet, and it's probably going to be a super low cap. And so, we definitely try to help our founders navigate what some of those terms look like and what to expect, and what to have red flags for. Also, I would say, since there isn't a ton of capital here, the network effects are also a bit foggy as well in terms of being connected with outside capital. And so one thing with accelerator funds or incubators that have more of a national footprint, which is one thing that we bring to the table. So if you think of our founding team, we have the two brothers from Equipment Share who have raised, 350 million plus in equity capital and have raised a couple billion in debt capital. So they know not just private equity investors, but also banks across the country, which is another topic to look into, is like SBA loans and whatnot for early stage startups, and venture debt. But we bring a network across the country. So they've had investors like Tiger Global come on their cap table. And then our other partner at scale is Jay Malik, who he has a fund called Countdown Capital that has investors across the country and globally, whether that's other VC firms or family offices. And so, joining a fund like Scale can really open up those networks where we're not just trying to connect you with investors locally or angels locally, but actually draw in capital from Silicon Valley or from New York City or Boston to Missouri. Because although there's a huge issue here around lack of talent, startups leaving because there's not capital or they can't get in touch with the right investors, but there is a lot of opportunity, because in the Midwest, you have people who have built traditional businesses, who build businesses based on first principles, where they don't necessarily care about all this press coverage and raising funding. They just care about building their business and building products that delight customers. And so although there's a problem, there's a massive opportunity here, and we're trying to take advantage of that with our capital.
A few things you mentioned there that I had really never thought of before, and they are good points, though. Different locations have grants. There are grants for cities and for states, for regions even. I also love that you brought up the college route. Most people that are going to be considering this startup route have an undergraduate degree at least, and there are entrepreneur associations at pretty much every university or college I can think of. Those are great sources for, that are outside the VC game. I think early, when you're entering this game, everything is VC, 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 but there are loans, there are grants, there's startup debt, like your venture debt, like you mentioned. I want to touch now on the location piece, because I think this is big. there's a pro and con to being in any location, but especially to being, let's say, Silicon Valley or New York, other big markets, and being in smaller markets. What would you say are the benefits? We talked a little bit about the cons here, that lower access to capital, lower network effects, lower access to other investors. But what are some of the pros of being an early stage founder, especially maybe a non-technical founder in a smaller market like Missouri?
Yeah, the one thing that's probably top of mind for everybody is really just the cost of living, and the cost of talent here. So if you're going to hire a developer in Missouri or Illinois or Kansas, it's going to cost a third of the amount if you're hiring a developer on the East Coast. And the rent, I was just talking to somebody the other day who has, I think, a 700 square foot apartment that was paying $3,500 a month in California, as opposed to an apartment in Missouri that is 1,500 square feet and probably costs you $1,200 a month. We can keep going down the line with how much things cost here, and anyways, but so that's one pro. Another would be the supply and demand piece. So if there's a lot less startups in Missouri, it is easier to get noticed, because there is not, like, if you're in the Bay Area, every other person is building a tech company, and they're going to do it the right way, and they can raise at a 20 million valuation without even having a pitch deck. They could have started it the next day and raised $2 million. And so, there is capital in the Midwest, but there's less companies to allocate that capital to. So if you are drawing capital here, which is, one of our theories is, if we're drawing capital to the Midwest more than there already is currently, there should be more than enough capital for the companies that are demanding it. So that would be another pro as well. And the ability to get press coverage and work with some of the Fortune 500 companies here as well would be another pro. I mean, if you think about the Midwest, there is a decent chunk of the Fortune 500 companies across the country here to be corporate partners for our startups. And so it's easier to get in with those companies when there's not as much competition.
One of the things that you mentioned discussing location is cost of living. And it's something that I tell non-technical founders a lot when they're looking at the amount of time it's going to take to build something and how much it's going to cost. You have to factor in your expenses into this. So if you're looking at potential partners and one of them says it's going to cost $20,000, but it's going to take 6 months, and another one says it's going to cost $40,000, but it's going to cost 1 month, you might think, oh, I have time, and you do, but that's also 6 months of your expenses. And we've had clients that we've worked with that have run out of money, not because of anything we did, but because they grew too quickly on the sales and marketing side, burned more of their capital that way, and then couldn't reach the product goals they wanted to because they didn't have any more money to build the product. What would be your advice for, and maybe based on some of the experience you have with portfolio companies or the startups you've worked with prior to Scale as well, what's your advice for making that runway last as long as possible and run as far as possible?
Yeah. So one, I think it's really undervalued to have a good financial model out the get-go. So one thing I do with our companies is I build out a very detailed financial model, understanding how much runway you're going to need in order to scale the company at a level that you're going to need to take over the market in the next 5 years. But in terms of stretching your runway, if you don't have very much from the beginning, is really, one thing. If you're a non-technical founder and you have to use a dev shop, in my opinion, that's the wrong way to go right out the gate. You're going to burn a ton of money, and then you're going to have a product that someone else has been working on that is just another project for them. It's not necessarily their baby or something they're passionate about. And in the future, you're going to have to hand that off to someone else. But you've kicked the can down the road for bringing on a co-founder. So then the person you bring on in 6 months is going to be somebody you bring on for a salary, and you're just going to keep burning and burning money. So what I would do is try to find somebody who is more risk averse and has the ability to have an appetite for more of this monopoly money of stock options that could be valuable in the future, and probably pay them a lower salary. It might also take 6 months, but you're going to burn a lot less money, and you're going to have somebody that is thinking about this when they wake up and when they go to bed at night.
For folks who are maybe still looking for a technical co-founder, maybe they don't have cash to go the dev shop route if that's the way they want to do it, what would you recommend for ways to kind of get things off the ground as a non-technical founder? You can't build it yourself. You don't have a technical co-founder. You don't have cash to go to a dev shop. What would be your advice for those people?
Yep. So there's a few ways you could go about this. One is obviously you have an idea. There's a problem you've identified here. You need to talk to customers over and over. So continually doing customer development, networking with angel investors. I would start by just talking to customers, and you'll get your pitch down a little bit more to customers, although that is different than what you're doing when you talk to investors, because you're selling to customers. Well, through the customer development, it's not sales. You're trying to understand the pain points of the customer. But through that process, you're going to find more and iterate more and understand what it really is that the customer needs. And you can take some of this confidence level through that and start talking to angel investors and networking them in order to get some early checks and get some runway. If that doesn't work, though, if you don't get any angel investor money, another route to go is, to start building an MVP using really low code or no code tools. And if that doesn't work, then I would say, honestly, start teaching yourself how to communicate with technical people and developers. I mean, at some point, you're just going to have to do it yourself. And I've talked to so many founders who have had ideas, they've kicked the can down the road for years, and they finally said, I'm just going to teach myself how to build it. It's going to take time, but if you're having issues with finding a technical founder, then that might be the route you have to take. And as somebody who wants to build $1 billion company, you have to be a hustler. You have to be scrappy. You're going to have to teach yourself some things and have a super steep learning curve, and you're going to have to wear many hats.
So something that you talked about in there that I want to highlight. You mentioned that there's a difference in that early stage in selling to customers and selling to VCs, which you, in a way, are selling, right? You're not selling your product, but you are selling your startup's equity, right? How would you recommend that an early stage founder learns about this process of selling to VCs? What are some resources that they could use to get better at that process?
So resources they could use, obviously, it's good to just start networking with people, reaching out to folks who might want to be advisors for you. And there's a lot of different places to do that, whether that's on Twitter, LinkedIn, Clubhouse. The name has slipped me. I think it's Lunch Club, where you can also get on to meet people. But start networking with folks, start reading on some of the resources on the website, maybe like on YC, do like YC Startup School. And then in terms of just understanding investors, I guess another resource would be reading a book like Venture Deals, and just going through like different literature. Talking to investors, you don't want to just set up a time and just start pitching them. What you want to do is really, if you're cold emailing them, just shoot over like a few bullet points. Don't ever send somebody your deck right out the gate. You want to talk to them first before sharing your deck. And when you do have that first conversation, you kind of go about it like, I'm not fundraising yet, but we will be soon, and have it more that it's coming down the road, and just get them excited about it. So when it is time to fundraise, you've got 8 to 10 funds that you've been talking to, and then you can start getting multiple term sheets set instead of going and saying, hey, we started fundraising, but we don't have any money committed yet. And so it's more of, getting somebody excited about it rather than saying, hey, we have no money, we need to raise funding right now.
That strategy is so interesting because it's something that I've talked about with clients of ours on the early stage and pre-sale side. Is you don't have to be selling to do sales, and you don't have to be selling to start talking to customers. Same thing with VCs, it sounds like. It's incredible. Most people want to be helpful, and most people want to make connections. So reaching out to VCs that you'd be interested in raising from later, and making that connection, building that network is huge. The same thing is true with early stage sales. Reaching out to potential customers and asking them for advice, asking them if you can ask them about the problems they're having. Be honest, be upfront. It's incredible the response that you'll get just through that kind of networking piece.
Yep. I think when you're talking to investors, it's the people get hung up on, building out the sexiest pitch deck and like spending all their time on the deck. But really, the deck, sure, it's important, and at sometimes it could get you a foot in the door, open up a door with talking to an investor. Even though I think that you should talk to the investor before sending them a deck. Um, but what's most important is being able to articulate your story well
Mhm.
and come into the conversation like, oh my gosh, I have this $1 billion problem that maybe it's being solved right now or it hasn't been solved, but we found a different way to solve it that saves X amount of money, or, it's whether it's a vitamin or um, pain pill product, it really depends. But being able to articulate that problem and how you're going to
Mhm.
solve it, how you're different from the market, and why you're the right person to build it is just so much more important. In most cases, you don't even need a deck. It's more of a conversation and portraying how passionate you are about what you're building.
Yeah, a fantastic offer story is something that we always say you need to start with. Forget design, forget a spec, forget building an MVP. If you can't articulate your offer in a story format, who is this customer? What is this pain point they're experiencing? How are they going to be introduced to your product? What transformation is your product going to give this person? And then at the end of the day, is that person going to take this and go tell other people about it, right? If you can articulate that offer story, that's a lot more powerful than a beautiful fancy deck, right? So for founders that have decided they want to move forward, they don't have funding to build the app themselves, they can't find a technical co-founder, maybe they've been looking for a while and they're stuck. They need cash so that they can move forward. What's a strategy you would recommend to non-technical founders looking to raise money without a technical partner on the team?
Yep. So there's a few ways, or I guess there's one that is kind of the old school way, and that is going to VCs with somebody that is technical and saying, "This is your CTO," and you behind the scenes, you're talking to this person saying, "If they invest, I hire you," which is kind of one way to go about it. Another is really being able to, like we kind of touched on this earlier about having like a no code platform or just getting a sense or LOIs or something from customers that shows traction and
Mhm.
shows that somebody actually wants to buy what you plan on building, even if you haven't built anything yet, um, is one way to do it, and just have people lined up that you're going to hire, like software engineers. It doesn't necessarily have to be a technical co-founder. If you look at like Airbnb, they didn't have any technical co-founders on the team, and yet it's one of the largest marketplaces in the world now. Um, and secondly, I mean, it's not a requirement for a fund for you to have somebody technical if you are building in a space where you have domain experience. Um, kind of makes the situation a little bit easier. And if you read a book called Super Founders, it kind of goes through the different demographics of a founder and their backgrounds. I might not be 100% correct, but I believe that only 50% of unicorns had somebody technical on the founding team. So it's definitely not a requirement, and it doesn't mean that you're going to be unsuccessful if you're not technical. I would say the biggest thing is, if you're not technical, just you have to learn how to communicate with dev shops. Because when VCs are investing in a company, especially from the earliest stages, they're investing in people who are driving the business. Like, the main reason they're investing is because of you, who's building the company. And if you're not a builder, then why are they investing in you? So if you can't be the product manager as the CEO, then I'm not sure exactly what you're doing other than having the idea and maybe building a culture around the company. So you have to understand how you communicate with developers. Um, I would, a good comparison is look at like Elon Musk. And I mean, that's an easy person to talk about, but there's a reason why he's been successful. And one of those is because he didn't just stop with learning about math or learning how build electric vehicles. He takes all of his employees and sits them in his office that are in different areas of the company. So mechanical engineers or industrial engineers or accountants or whoever it is, and sits them down and asks them super high level questions about their job and what they do. And then goes deeper and deeper and deeper. So he learns how to do every single position in the company. And he still does that. And he's a multi-billionaire. And so it's not, it's also kind of goes back to like, what is driving you to build this startup? Is it just economics, or is it just a pure passion and hunger to build companies and solve problems? And for you as a founder, you really have to ask yourself that question and really understand yourself before you go out and hire a CTO even. So that's one thing that we focus on at Scale, is really digging into the person's personal growth and having them understand who they are, and realizing that if you're building this company and you know some unique insight in the industry, that you really know more than anybody else, and you have to understand yourself first and take care of yourself first, and then go out and hire CTOs or engineers or whatever it is.
There's a Paul Graham piece, and I'm going to totally mess up his verbiage in it, so I'm not even going to try. This isn't even a paraphrasing. This is me remembering it from reading about it, but basically talking about there's two things that you're responsible for as a founder: selling and building. If you can't build, that's okay, but you need to be able to demonstrate that you can manage building as well. And it sounds like that's what you're talking about. You don't necessarily need a ex-Google, MIT grad tech founder on your team. You do need either you or somebody on the team who can take a vision, translate that vision into product goals, oversee those product goals getting converted into design, and then later on into development and actually into the product.
I totally agree. Because in the early days, the only thing you're doing is building and talking to customers. There is no selling going on until you really have a product, unless you are selling something beforehand. And, it's different. It's a case by case basis based on the industry. But yeah, it's being able to either you're the one building it, or you're communicating with customers and relaying what they want to the people building the products.
For those founders that don't have that skill, they don't feel comfortable running a dev shop. Maybe they are running a dev shop and it's been 6 months and they're just not getting the progress they were expecting, so they feel a little stuck. What are ways that you would recommend these folks can find good partners, technical co-founders and the like?
Yep. So there's a few resources that are out there publicly that you can use. One of them is, so if you get on YC Startup School, they have a co-founder matching program, and there's thousands of people who are technical that might not have an idea, and they're looking for another startup to join. There's a platform called lemon.io that connects you with engineers in Europe within 24 to 48 hours. There's Turing.com that helps you hire contractors. Brain Trust, which is a DAO, is a really good platform that will connect you to either domestic or international developers. And what's cool about their model is that you can hire them as contractors, and then after 6 months hire them full time, and they don't charge any fees. Like if you have a recruiting agency that charges 20% of the salary up front. So those are a few. Another obviously is AngelList. Everybody knows about AngelList, so posting a job on there. Another strategy which actually worked for one of our companies just recently, is reaching out to people at technology companies in the same industry as you and just trying to poach some of their engineers. I mean, the people that are technical and understand your industry, but have also worked in startups, so you know that they have an appetite for working in a startup environment. And from the early days, what's really important is not just to go for the flashy resume, but to go for the people who have built companies in that startup environment and know what it's like. Another thing too is, when you're also recruiting these people and you don't have a lot of funding and you're also playing with equity, is how to relay the bigger picture of this company and why this monopoly money that you're selling them is going to be worth millions or billions of dollars in 5 to 7 years, and how there could even be an opportunity to sell some secondary shares in the market in 3 years from now because your company has scaled so quickly. So it's just being able to, put some numbers on paper. Hey, this stock is going to be worth this if we can execute. Is another strategy. It's it's the same thing with selling, like we talked about. Whether you're selling to customers or selling your vision to investors, you're also selling your vision to early hires or a CTO.
The sales element is so important, just as a overarching concept. So many, especially first-time founders, can be afraid of sales or uncomfortable with sales. They don't want to push people, they feel. They don't want to oversell a potential hire. Sales is just offering something to somebody. And if somebody's at a company and they're unhappy and you pitch them on poaching them, and they come to your company because they were unhappy with that other one, that's not being pushy. That's not being weird. You gave them an offer that could benefit them, and they bought it. I saw on Twitter the other day a founder saying that they've hired, I want to say it was like 15 people in the last year, by watching for when big companies announce they're returning to office and messaging their engineers and saying, hey, just so you know, we're only remote, all remote, and we'll never go back to office. If you don't want to go back to office, drop me your resume. He's hired 15 people in the last year just sending that message.
I need to take note of that. That's a very good idea, to be honest. I mean, we help our companies with hiring support. So we're constantly looking for full stack developers for our companies. And I mean, if you look at the market, it's huge demand, very low supply. And if you're in the Midwest, the companies on the coast have been reaching to the Midwest to hire people remotely. And so now you have our minimal amount of technical talent in the Midwest working remotely for East Coast companies that can pay them twice or 3 times as much.
The thing that I always tell founders is you have to be realistic about what you have to offer. The number of, especially when I was in New York and I would go to startup events, back then I was just a freelancer, and you would get endless pitches as a technical person from people who thought their startup was just, without a doubt, obviously the greatest thing that's ever been created. How could you even not consider working at my wonderful startup? No, I can't pay you. No, I'm not going to give you 50% equity. No, I don't have any pre-sales or any traction. No, I don't have any experience, but just trust me. It's going to be worth it. You should take a 10% cut and no salary for the next year, and trust me that it's going to be big. Regardless of what position you're in as a founder, and especially as a non-technical founder, you have to be realistic with potential partners and potential fundraising outlets, VCs, etc. You have to be realistic about what is your traction situation? What is your skill set? What is the moat around your company? How big is your niche? How big is your market? And not the well, if we take the 7 billion people on the planet and we capture 5% of them, then we get this huge market. Yeah. You have to be super, super realistic when you're talking to partners. Otherwise, they'll see through it.
Yep. I would say a big thing, too, is just being confident and passionate about what you're doing. Because people can tell in the emotions if you're confident and if you're passionate about the company, and if you're trying to bring somebody on. Another thing too, just, we haven't even touched on this, just about emotions, is being very empathetic and understanding somebody else and being personal. Don't be super transactional when you're trying to hire someone. This is an emotional, long-term relationship that you're locking in with somebody on a 4-year vesting schedule. So that is another thing to note.
Thank you again, Brett, for coming on the show. For anybody who's interested in checking out Scale VC, they're at scale-vc.com. Go check it out. Check out the Accelerator Fund. Check out the Venture Studio. Check out some of their portfolio companies. There's some really cool companies in there. Brett, thank you again for coming on. Really great advice, and hopefully we'll have you on again sometime.
Sounds good. Thanks again for having me, James. Have a good one.